Hello and welcome back to Money School. Things you always want to know about money but didn't know who or where to ask. I'm Mike Frost. I'm here at Mach 1 Financial and we're putting these videos out here for people that want to know more about money. And you checked in today because we're going to be talking about Social Security. As you can see from the list here, we've already covered 8 other topics. And if you haven't watched those, we highly recommend you go back and watch them. But today's video is going to be all about Social Security. Now, what we're going to talk about is not for you to go run out and sign up for Social Security to do it. This is top line general information about Social Security. And so most of you know, if you're an American citizen, you're probably paying into Social Security and you want to be like this couple here, smiling in retirement, knowing your Social Security is helping supplement your retirement and you know you're going to have a worry-free retirement. That's what we all look for, right? Well, let's get into Social Security. What is it? Well, we got to talk a little bit about the history of Social Security. It started in 1935 with the Economic Security Act. It's really called, if this is ever on Jeopardy, you can win an answer here. The official name for Social Security is OASDI, Old Age, Survivors, and Disability Insurance. That's probably not politically correct these days to say old age, but that in fact is the name of it. Okay? There's actually 2 funds that fund the Social Security. One is OASI Trust Fund for retirees and the DI Trust Fund for disability beneficiaries. A lot of good knowledge you just need to know about Social Security. How do you pay for it? Through your FICA tax, Federal Insurance Contributions Act. Okay? How is your benefit calculated? Well, it's on your 35 highest earning years. So if you've worked for 40 years, they're going to take out the 5 lowest and only count the 35 highest earning years, which will then determine what your monthly benefit will be. The first beneficiary, the first recipient of Social Security benefits was 17 cents back in 1937, Ernest Ackerman. But the person that got started receiving monthly benefits was May Fuller. She contributed a whopping $24.75. Her first benefit check was $22.54. And she collected benefits for 35 years. Now, it doesn't take a math scholar to figure out. She got more benefits than she ever thought about paying in. And therein lies why our system is in trouble. Almost said broke. It's not broke, it's not going broke, but it is in trouble. We'll talk about that here in a second. All right. Social Security. When should you start taking it? That's the $64,000 question. Well, the earliest you can take it is age 62. And it doesn't make much sense to wait past 70 to take it. So what are some things to think about? Well, what is your benefit going to be? All right. Will you have a spousal benefit? What is that? We're going to cover that. Could you be eligible for a widow's benefit? What if you were married for over 10 years? You could be eligible for a divorced spouse benefit. All of these could be yours. Okay? Are those benefits subject to tax? The answer is yes. There's this thing called provisional income. Depending on how much money you make, up to 85% of your Social Security could be taxed at whatever your tax rate is, okay? And this thing that's been bandied about in 2034, the Social Security Administration has come out and said, if something doesn't change, in 2034, they're only going to be able to fund between 70 and 80% of what you're due. So if you're due $1,000, you may only get $700 or $800 of it in 2034. Now, that's, 13 years from now, but it'll be here before we know it. And if something's going to be done, it needs to be done soon. All right. So the big question, when should I take Social Security? Well, this is a chart that shows you the optimal age to take Social Security. You'll notice on the far right-hand side is age 70. That is when you'd get the maximum amount. But the actual claiming age, as you can see on this chart, is on the other end of the spectrum at 62. Really doesn't match up, does it? Well, there's lots of good reasons to take it at 62. There's lots of good reasons to take it at 70. That is a very personal decision, and you should seek the help of someone that can help you with that, like us here at Mach 1, to sit down and explain all the options in all the implications. Because once you turn it on, very few instances can you do anything about that. It's on, it's on. And if you turn it on early, you're going to get less. Now, that's the bottom line there. And here's an example. So let's say you're going to get $1,000 a month. That is your full retirement age benefit. And in this example, your full retirement age is 66 and 6 months. Okay, this person was born in 1957. Well, if they're due $1,000 at age 66 and 6 months, and they take it at 62, their benefit, not $1,000, they get a haircut is what I call it. It's $725. That's almost 30% cut. Now, if their spouse then applies, since they took it early with a haircut, then their spouse also gets a haircut. You know, they're due $500, but they only get $337. So instead of $1,500 total, they only get $1,000. So $500 cut, that's a 50% cut of what they could have had, right? So you really need to be sure before you take Social Security, is it the right time to do it? And there's a lot of reasons why you should. Then there's a lot of reasons why you should not. All right, so if you wait all the way to age 70, whatever your full retirement age, mine happens to be 66, and I think it's 9 months. If I wait another year, 67 and 9 months, 68 and 9 months, every year I postpone taking it, my benefit goes up 8%. Well, think about that. So I lose a year taking it, but my benefit's larger. But if my lifespan's the same, then I have a fewer years to take it. There is a break-even point in there, and it's usually between 80 and 85 for most people. So if you have longevity in your family and you plan to live to be in the 90s, then it would make a lot of financial sense to wait till 70. If most of your people in your family pass away before they're 70, then you should obviously take it sooner. Seek the help of a professional before you sign up for Social Security. All right, provisional income. What is this thing? This determines how much of your Social Security is taxed. All right, you see a little chart there. So if you're single, if you make less than $25,000, then none of your Social Security get taxed. If you're single and you make between $25,000 and $34,000, up to 50% of your Social Security be taxed. And then the last bracket, more than $34,000, up to 85% of your Social Security could be taxed. Now, not 85% tax, 85% of it could be taxed. And then on the right side, you see what it would be for a married couple, okay? So what is counted in provisional income? Well, it's all income, including 1/2 of your Social Security, with one exception. Any income from a Roth IRA is not counted. Now, if you go back and watch some of our earlier videos, you'll notice we are really big on doing Roth IRAs, especially now in this tax environment. So if you're questioning, well, maybe I should do that. Hey, give us a call. We'll be happy to walk you through and see if it makes sense for you to do some Roth conversions so you don't have a provisional income issue, and it may not have a tax issue in your retirement years. Okay, that's provisional income. So I mentioned earlier about the 2034. Here's the note from Social Security Administration, and this was all the way back in 2017. And you can see what it says here, that in 2034, if something is not done, they'll only be able to fund about 77% of their liability. Again, if you have a $1,000 payment and they only can fund 77% of it, that's $770. Maybe another reason to start applying earlier. Or you could say, hey, I can get a bigger benefit. If I have to take a haircut, then it's off a bigger benefit. We look at all those factors when you come in and talk with us about when to start your Social Security. All right, so what are your options? Lots of options here. Again, it's based off of your income history and your years at work. You got to work at least 35 years to get the max. If you work 30 years, they average in 5 zeros. Not good. 35 years is the key. All right. There's this thing called spousal benefit. If there's a stay-at-home or ex-spouse, stay-at-home spouse didn't work, you can apply on the spouse that did work on their income. If you're an ex-spouse and you were married for at least 10 10 years, you can apply on the ex-spouse's income. You can do that. Now, there's a couple of parameters for that, and we'll cover that in a minute. You got to be at least 62 or older. That we talked about that. 62 is the earliest you can file for Social Security. And if for the spousal benefit, it would be up to 50% of the working spouse's benefit. So the working spouse gets $1,000, you would be eligible for half, or $500, okay? How about divorced spouse, all right? You got to be married at least 10 years and cannot have remarried before you're 60. So you got to be married for at least 10 years and you have to be single until you're at least 60. At age 61, you don't get married? No problem, have at it. The ex-spouse has to be at least 62 years old for you to file on their account. Now, they do not have to have filed. They just have to be 62 years old, and they never have to know that you filed. Now, it would help if you know their Social Security number. And again, it'd be 50% of what they were supposed to get. Then there's survivor's benefit. Now, these things get kind of complicated, like what about this? So you got to keep these straight. Survivor's benefit. So you're married, spouse passes away, okay? And this is after the age of 60. 60 now, okay? So let's make the math simple. You're both 65. The spouse passes away. Their benefit is $1,000 a month. Yours is $500. When they pass away, you get the higher of the two. Well, in this case, it'll be theirs. So you keep your $500. You add another $500 to equal theirs. Now yours is $1,000. But remember, you were getting $1,500. They were $1,000, you $500. Now they pass away, you get the higher of the two, $1,000. But you still lost $500 worth of income, but you don't have another mouth to feed. Okay, so keep that in mind. All right, you don't get both, you just get the higher of the two. All right, so well, how do I sign up for this thing called Social Security, or how do I know what my benefit is? Well, here's the website. This is what it looks like. So if you pull up their website and you want to find out, well, what's my benefit, Mike? All right, you go down the bottom left corner, you see that thing that says My Social Security, click on it. It'll bring this page up. If you've already got an account, you hit sign in. If not, create one. Create an account right there. Boom. Then it brings up this page. Then what are you going to do? I'm going to hit create account, click it, boom. Then you got to read through all this and agree to it down at the bottom. Say, yes, I agree, and hit next, boom. And then you put in your personal information. Now, be careful when you do this. Make sure it's all correct. It'll ask you some security questions. You better remember the answers, because if you ever need to get back in there, you'll have to have those answers to those questions. And once you do that, you hit next, and then it'll come up and ask you something like, how much money did you make last year? And they'll confirm that. And then it'll give you a projection, give you three numbers. Your benefit at age 62, your benefit at your full retirement age based off your birthday, and then your benefit at age 70. These are all estimates, but it gives you something to start planning with. All right, so that's how you can find out how much you're due on Social Security. All right, we covered a lot of ground here on Social Security, so know your options. You have options. Don't just run out at age 62 and sign up. That might not be the best thing for you. If you don't have 35 working years, or the spouse of someone that has 35 working years, then you know it's going to get reduced because you'll have some zeros averaged in on your benefit. Okay? When you make the claim to start your Social Security is critical. There is a provision that says within 12 months of starting your claim, you can say, nope, I don't want it, stop it, but then you got to pay back everything they've sent you, and not many people can do that. So once you claim Social Security and start your benefit, it's done. So be absolutely sure that's what you want to do. Your benefits can be taxed. Up to 85% of them can be taxed in retirement. So if you have a lot of other income and Social Security, you could be being taxed on that Social Security. How can you prevent that? Well, a little planning, some Roth conversions maybe. But again, meet with someone that can help you walk through all of these what ifs. There is a potential for the benefits to be cut in 2034 or 35, up to 30%. So just know that and put that in your planning. And it's complicated. You see all the options, how one thing affects another. So don't go at this alone. Get the help of a professional. We can help you here. We can give you some guidance. We are not Social Security people, but we deal with it every day, and we can give you the what ifs and the maybes, and this is what happens if you do this. So give us a call here at Mach 1. We'll be glad to help you out. All right, our thought of the day. Thinking before action is wisdom, but acting before thinking is regret. And if you claim your Social Security benefits before you think about it, you will regret it. All right. If you like this video, give us a thumbs up, like it. We'd love to have any information from there. If you have any comments, put them here at the bottom of the video. If you're on YouTube, hit the link there at Mach 1. Send us a comment. Any questions, send those to us. And if you want to talk to us here at Mach 1, you can go to our website, as you see here, or you call us, 479-876-2100. That's here at Mach 1, 479-876-2100. We've got 2 more classes to go in Money School. We look forward to you coming back to our next session, Medicare and Medicaid.